All right, Matt Davio here with Carley Garner. Carley, I'm going to introduce you, and before we get going, to just tell people a little bit about you. You are a senior market analyst and broker, uh, author of a number of books. First, a trader's first book on commodities and commodities options, and I know you're working on another book currently. And for those that aren't familiar with me, I'm an independent trader. I trade my own book. I don't manage money. There is absolutely risk associated in any type of trading, and I would not go lightly into any trading without the proper education is all I could say as a full disclaimer here. A couple things that Carley and I are offering. If you go to Carley's website at dcarley, D-E-C-A-R-L-E-Y Trading, they are offering for those who are interested.
I can't even get out of the screen.
To offer a 30-day, or rather a simulated trading account via their platform. And if you've never traded or are looking to trade,
The 1365 call?
Great way to...
Or 610 at 650.
And here at EMIS Trade, we're offering a 30-day free subscription to our private Twitter feed for notable ideas and thoughts on the markets. If you're interested in that, just, again, ping us at the end of the webinar today and we'll start your 30 days on the private Twitter feed. So with that being said, I'm going to turn it over to Carley Garner, and we're going to talk a little bit today about scanning markets for opportunities. And this is really a great topic in how one can look for ideas and ways to speculate and make money in markets. The commodities, especially right now, and the futures are very volatile, much more so than the equities markets. And let's turn it over to Carley here, and she's going to start with a series of screens, and we'll take it from there. Carley, are you there?
I'm here. Can everybody hear me?
I can hear you. I'm assuming everybody else can.
Okay. I'm going to assume that everybody can hear me.
Okay.
Right. Well, first of all, I want to thank everybody for coming out and being with us today. It's kind of rare for us to be able to do something like this during the middle of the trading day. It's kind of tough to get away from the markets. But we've squeezed a few minutes in, and hopefully we can all get something out of this. Now, everybody should be able to see my screen. Is that accurate?
It is live. Yes, it is.
It is live. Okay. Okay. Today we're going to talk about, as they've already explained, we're going to talk about scanning the markets. Now, we're not going to tell you, we're not going to give you trade recommendations, but what we're going to do is explain, what we're looking for when we're basically scanning the markets. What kind of price movement we're looking for, and some of the ideas that we've got in mind. If you're not familiar with me, my name is Carley Garner. I am a broker at DeCarley Trading. Please visit our website if you haven't already. Once on the website, if you're interested in a simulated account, you can certainly sign up for a free simulated account. It's live for 30 days. Beyond 30 days, basically, what we do is we give people access to the account. You can still trade it, but the data within the trading platform is delayed by about 10 minutes. But it still will give you a good idea of and a way to paper trade. If you're interested in learning more about the markets and trading in general, these are the two books that I've written thus far, and I'm working on a third.
Hey Carley, let me.
They're cheapest on. Yeah.
Let me say that I read your Trader's First book on commodities, and if you're new to this space and you have not traded futures or commodities, this is a fantastic book. You really did a great job, and I have not read your commodity options, but I think that's the second step anyways. If you're new to this business, a Trader's First book on commodities is really a great business that really explains the mechanics, if you will, of futures and commodities. And this is, again, not something, although these are great vehicles to trade, you really want to make sure you're well educated and versed on the risk associated with that. And your books are, I think, a great a tool for everybody to have in their library.
Thanks, Matt. I appreciate that. Again, just one other thing on a Trader's First book on commodities. It's a lot different than any other beginning book that you've ever read, where it's not about technical analysis or fundamental analysis. It's about how do you, as a trader, get started in trading commodities and make the right decisions on everything leading up to the actual trading itself. And it's my job to tell you that there is a substantial risk of loss in trading futures and options. Trading is not suitable for everybody, and you know, it's up to us to give you all the information and all the tools that you need to make a decision as to whether or not trading is for you. And I want to apologize in advance if things seem a little chaotic here from the beginning. I apologize. It's, like I said, during the trading day where things are craziness. We thought we were all prepared, but last minute chaos ensued, and here we are. Anyway, identifying opportunities. Well, obviously there's software out there that will scan the markets and tell you what's overbought and what's oversold and all this kind of stuff. But a lot of retail traders don't have the time, don't have the money, or you know, they have day jobs. And so I've found a really easy way to quickly scan the markets, and it's free, and it's called barchart.com. And I don't work for Barchart, and I'm not getting paid by Barchart by any stretch of the imagination, but I think that it's a great tool for retail traders. So I'm just pointing it out to you. What you can find at Barchart is stats on, you know, where the market's been year to date, how high we are from the lows, how low we are from the highs, that sort of thing. This is just an example. I'm not pointing out that I think we should be trading wheat, corn, soybeans, or anything based on the information on the screen, but what I am saying is Barchart will give you this information. If you go to the futures section on Barchart, you can click on a link that says year-to-date highs and lows, and this is what you're going to find. It'll list all the commodities, not just the grains, but I happen to have it on the grains. It'll list all the commodities, and you can basically get an idea of where the market is now relative to its year-to-date high, its year-to-date low, and it really gives you a good visual idea of which markets are moving and which markets might be a little overextended. For example, if you look at wheat, wheat's 10% off the year-to-date low, and obviously we're near the year-to-date highs. And this is a snapshot of a few days ago. It's actually even more extreme than this. But anytime you see a market that's moved 10% or more in a short period of time, or even in a year, that could be a candidate for playing the opposite side. And I know that sounds crazy. It seems like you should do the opposite, right? The market's going up. Why would you want to sell it? Well, we tend to be option traders. In fact, we tend to be option sellers. And if the idea is to buy low and sell high, you want to be selling options when they're overpriced. And when are they overpriced? After the market's made a big move.
I would say, you know, there are some great tools, and again, Barchart is one of these, and it is free. I highly recommend it, and it's a great site, especially if you're not fully committed and want to just get quotes. You can also get some pretty live quotes from the CME site. I would recommend the CME for education and information. There's some great information on the CME site. You want to know your nominals for every vehicle that you're trading before you ever make a trade. You know how much every cent or every tick is worth for every contract that you're holding. Know these things. Understand rollovers. These are the types of questions that you want to have answered before you ever put on a trade. And that's just something that, again, having a broker like Carley can help you with these types of questions if you've never traded. This is not equities where 1,000 shares and $1 means $1,000. So everything has a little bit different feel to it. The hours that are open are different for all the vehicles. And use these free tools and use referrals like Carley to answer some of these questions if you're unsure. Again, make sure you know the answers before you ever step into any marketplace. Another site that I would recommend also for good information, especially for news flow for all traders, is Forex Factory. I have this on my site. It's another free site that I have no affiliation with outside of the fact that it's a nice free service where, again, traders can find out when the FOMC meetings are, when the different jobs reports, the consumer confidence reports every day. You can filter it out by the U.S. or a total world view and find that information. So, Carley, you doing okay over there? Are we ready to continue?
Yep, we're ready to roll. Okay. Sorry about that, guys. Okay, another this is very similar to the previous screen, but just to give you an idea, you can kind of zone in on these markets. Like, first of all, we looked at where the market is relative to its yearly high or low. Now we're going to look at where is the market according to its 5-day high and low. And you can see some of these markets are 5 to 7% off of their 5-day lows. I mean, that's an incredible move. And usually when you get an incredible move like that, implied volatility in options has exploded, market sentiment has exploded, and what that means to an option trader is there might be an opportunity for a short option trade. In a few minutes, we're going to kind of go through a more detailed setup. But again, this is just to give you an overview of how you can use some of these free tools. Barchart.com also has a way to see what's moving today. Now, I couldn't fit it all on the screen. If you actually scroll down from here, you would see which markets are moving in the red at a large percentage. But I mean, on this particular day, the Dow was up 2.5%, cocoa's up 2%. I mean, I'm not saying just because a market's up 2% in a day means you should automatically sell it. That's not what I'm saying. But what I am saying is this is a good way to just kind of quickly and visually skim the markets and see what's moving, where the opportunities might be. And now we're going to zone in on a particular market and just get an idea of how we look at things before we start recommending trades. Once a market is deemed to be suitable to trade, and what I'm talking about that is once you go to a source like barchart.com and you see which markets are volatile and where they are based on their trading range, at that point you want to start looking at where's the futures price, charting the futures price, evaluating a change in option price, and then I always rely on seasonal tendencies. Seasonal tendencies aren't perfect. They're not going to, it's not the magic sauce that's going to, guarantee profits. Nothing is. But if you go against seasonals more often than not, odds are you're probably going to be a loser. This is a pretty recent chart. This actually is a few days ago in crude oil. And as we now know, crude oil's testing 86 support. In fact, we even dipped a little below 86 in crude. But that doesn't mean I've given up on the trade. I actually think crude oil is probably going to find a low somewhere here within the next dollar or so and rally right back up. If you've forgotten already, just last week everyone was talking about crude oil $100. It's inevitable. CNBC or some of the other news stations were saying, everybody knows crude's going to 100. And obviously, that's exactly when people know what's going to happen. That's exactly when the market does the opposite, because nobody knows what's going to happen. But I think crude's going to find a low. So I mean, as an opportunist trader, this is a situation where you might look at this, whether you're a futures trader or an option trader or whatever it is, you might say, hey, the goal is to buy low and sell high. Well, we're on support, we're oversold. Everybody probably thinks the market's going down now because that's what happens. The market does exactly opposite what everyone thinks is going to happen. This might be a time to start putting on a bullish position. As an option seller, and this may not apply to all of you, but we tend to be option sellers because we feel like the odds of success in option selling is much greater than some of the other strategies, and there's a lot more room for error. So what we do is we take a look at where the option is trading now and where it's been in the recent past. I mean, you see this option has obviously lost a lot of value over the last, I think this is like a 2 or 3 month chart, but that's okay. I mean, that's what options do. They lose value. It's an eroding asset. But what you want to know is where was this option last week or maybe 2 weeks ago. And then that's when you start looking at if an option's doubled, tripled, or even quadrupled in value, even better, that's when you want to start looking at maybe being an option seller. Those are the options, the ones that have exploded to a price that didn't seem realistic last week. That's the one you want to look to sell. That's the candidate. Okay. And again, I told you seasonals is kind of my comfort zone. I always look at seasonal. I don't necessarily always go with it, but I always have it in the back of my mind. And if my particular idea or trade is against the seasonals, I'm probably a little more sensitive to adverse price movement and try to be a little more cautious with it. In this case, and if we're talking about crude oil here in the next couple of weeks, seasonally supportive to bullish. And again, that confirms our idea of trendline support. And it might be a time to buy crude. I'm not giving a specific recommendation, but ideally I think crude might make its way higher from here. And once again, my name is Carley Garner. Here's my phone number. If you have any questions, comments, or concerns, feel free to either email me or give me a call. And please visit our website, sign up for our free newsletters, our free trading simulators, and I'd love to answer any questions that you might have now, or I'm sure Matt would love to speak to you as well.
Let's talk a little bit, Carley, about this, because selling options, the traditional book is always, it's a dangerous vehicle. And that's true, because there is unlimited risk by selling options. There's no top. The maximum is whatever you sold it for that you can make it. So I'm sure that there are strategies that you use besides just selling an option, which I would imagine entail maybe back spreading, buying an option out against an option that you're selling in the front month. You might buy something in the background if it's longer term. Do you want to talk about that a little bit? A little discussion on back spreading, because again, that's something that a lot of people aren't familiar with or maybe haven't thought about.
Sure. Yeah, there's more than one way to skin a cat, and everybody's personality is different, and the bottom line is you have to find what works with your personality, because if you're trying to sell options just because I say that I think that's the best way, then that's the wrong reason to sell options, because mentally, if you're not in the mindset to sell a naked option, chances are you're going to panic and get out at the worst time, right, or you're never going to pull the trigger in the first place. So you have to find what works for you. Now, I work with a lot of clients that think that option selling is just the craziest thing they've ever heard, so they trade futures, and a lot of them sometimes they'll even they'll trade futures, but then they'll sell options around it. So that's an idea as well.
Right.
Like if you think whatever, if you think wheat's going higher, you might want to buy a futures, but you can hedge yourself by selling 2 or 3 calls above, and that way you're not completely naked on your options. And on the other token, if the market falls back a little bit, your short option premium's eroding, and that's hedging your futures. So I mean, there's certainly ways to do it that aren't nearly as quote-unquote dangerous as selling naked. The reason that we tend to prefer naked option selling, and it sounds crazy on the surface, I mean, think about it, you have unlimited risk, yet you have limited profit potential, and you can be super, super, super right, and the most you're ever going to make is basically what you collect on the option. So I mean, there's definitely some drawbacks, but the reason we like that is we tend to be in and out very quickly. Like if we're selling an option today and the market bounces tomorrow, we buy it back and get out. It's a little different than traditional option selling, where you just sell the options and you let it sit and hope that they expire worthless someday.
Yeah,
we don't really do that. It's a little more active. So I mean, I would say it's probably a lot like trading the futures, only in slow motion, kind of.
Yeah, well, and let me add a little bit on my 2 cents, because I'm a big fan of option selling myself also, whether it is puts or calls. That's always been the way that I prefer to trade them. And I couple that with looking at an existing chart and again, an opportunity, whether it's, again, an equity, future, commodity. I want to look at things that have had, just like you, I want to look at things that have had big moves, up or down, and then what is the reason why they've moved? Is it a seasonal thing that relates to the commodity? Is it pure speculation? Is it because there was a new regulation that was put in on margin? There's you need to kind of try to understand why the volatility, the implied volatility, has maybe spiked versus the historical. And I agree. And here's where I think it's a crucial point for people to understand. Once you've done that analysis and kind of a chart maybe going parabolic, there has to be a number of reasons for it to continue to move in the direction up or down, and that usually means continued volume. And so with that volume, for volatility to continue spiking, you have to have more buyers to the upside. You have to have more sellers to the downside. And the reason why selling options, whether it's puts or calls, during an environment like this are so favorable, Carley, is that the volatility does spike. And it's not that it can't continue, but it really needs a powerful source of buyers or sellers to continue that spike. And it can't, and again, it can
Right.
happen. But
Exactly.
but what we're saying here is we're trying to take a situation and exploit that spike, if you will, in that volatility. And you don't have to be so perfect, as you said. You can sell out of the money calls, and maybe we've spiked hard, and we're just going to sell these. And as you said, slow motion. If wheat's trading 850, and maybe we want to sell the 870s because we just came up from the 750 level. maybe that's a good, and we know that if it goes over 870, it gets a little riskier. But after a big 15% move in the last week, that might be a good way, again, I'm just giving a real world example of a market right now. But it's not willy-nilly selling of options.
Right.
And I think that's your point that you're trying to make, and I just kind of wanted to throw in my 2 cents there.
Right. Exactly. No, I appreciate that. You did a very good job explaining.
So when you do a scan, how do you I want to ask you a little bit about how you look at your day, because different markets, again, open at different times. Do you kind of rotate your schedule and your trading with your customers around, different markets and different vehicles?
Well, I mean, the thing about option selling is you have to make sure you're where the liquidity is. If you're not, it can be just complete disaster. And a lot of people learned that lesson in cotton this last year. I mean, cotton options were a mildly illiquid market. They were tradable, but a little questionable when it comes to liquidity. And then once once things started getting wild, option traders just really it was just impossible. Not impossible to get out, but I mean the bid-ask spread was like a penny, 2 pennies. It was just so outrageous that option sellers and even buyers really got smashed on it. So we're trying to keep with liquidity. I mean, really the markets we focus on are the stock indices, the treasuries, a few of the currencies, because currencies are kind of hit and miss when it comes to liquidity, golds,
right,
crude oil, and some of the grains, corn and soybeans. So that tends to be our core. So it's not like we're trying to monitor all 40 or 50 commodity markets.
Right, but again, the key theme here is liquidity. Where is the action? And that, as in trader speak, you hear liquidity all the time. But the way I try to term liquidity is where are players playing? And you'll see this in the pits when you're down in the floors in Chicago, New York. It doesn't matter. Traders will gravitate to where the action is. It doesn't matter. It's wherever the price ranges are the widest. And I think the reason, Carley, this is because as traders, I cannot predict tops and bottoms, and I don't think anybody can. But what I can do is, based on greater volatility, is try to pinch that middle and really take that middle action and just make that take a bite out of that wider range. So the wider range and the more activity I have in a vehicle is where I want to play. And the reason I ask, if you look at a day, because the way I kind of break out a day, Carley, is I'll come in and I've got financials basically opening on New York Open at 6:30, but they trade 24/7. I tend to trade only due to the same issues that you're talking about. I want to trade liquid hours, and for me, that means that first couple hours, and then we go to that lunch lull, and then kind of the last couple hours is kind of how we segment the day. And I was just curious, when you look at grains, which are now, the pits are as busy, they're probably busier now in wheat and corn than they are in the S&P E-minis. But there's a different time frame, that is associated with greens. They're only open from 7:30 until right about now, 11:15. They're closing. So, do you have any suggestions and thoughts on how people should, play in these liquid times?
No, that's a valid point. Well, now that the commodity markets are almost 24 hours, it kind of pulls some of that, throws some of that out the door. I mean, I agree with you 100%, but it makes things a little more complicated, I guess is what I'm trying to say.
Yeah.
It's very important to realize that, like gold and silver futures are open almost 24 hours a day, and so are the options, but the options have no market makers beyond like 2 o'clock Pacific time in the afternoon until we get back into the morning. So, I mean, what I do is I check everything at the end of the day, right before I know liquidity is going to drop off, to make sure that there's nothing going on or there's not any adjustments that need to be made, so on and so forth. But when I start the day, I guess I really just start with the financials, treasuries, and stock indices, and the only reason that I start there is simply because those particular markets tend to get a lot of overseas traders, and so they tend to be pretty liquid throughout the entire night. And so it's they're a little more telling than maybe some of the commodities that don't get as much action overnight.
Okay. So yeah, again, but you're still, wheat, the grains are closing here for about 5 hours. So you got to be, you have to be aware that the futures market on wheat is closed between, I guess, 11:30 and 4 o'clock, and then it reopens again, and then it shuts down again, early in the morning before reopening. So there are these periods. I just was bringing this up just so people are aware that you really need to know. Absolutely, the ES, the NASDAQ, the Russell, the Dow futures, those things basically trade all but 15 minutes a day and on weekends. So that's easy. Gold, same thing. Oil, same thing. These things are much more liquid. But if you're unfamiliar with the grains and the rollover periods and when they're open, and I'm sure you advise your clients the same way, just understand when, how these things play. And as you said, the seasonals come into effect. And wheat doesn't trade the same way as the ES. So make sure that you educate yourself. Make sure that you understand the rules, I guess, before you play the game. And that's something that, I try to teach my kids, in anything in life is if you don't understand, ask and figure it out before you throw your hard-earned money at a trade, just to trade.
Exactly.
A couple.
Exactly. I agree 100%.
I want to bring up kind of my 5 rules of life that I kind of like that are out there, and I'll just throw them out here real quick. And these kind of reiterate what we were just talking about. The first is ask questions. And, listen for the questions inside the question. Listen for multiple answers. Let yourself stay with one question over time. And this applies to anything in life, I think. So use that type of idea when you're looking at trading. The second one, and these obviously can be applied very nicely to trading. The second one is walk or get away from the screens. As traders, we can get just bogged down, Carley, at looking at every single tick, and I think that can be it can be a good thing, but it can be a bad thing if you're sitting there and there's really nothing to do, and you're looking for a trade and the markets just aren't moving. Step away. The markets will move on their own time frame, not when you and I want them to. And I think one of the best things you can do is walk away, get some fresh air, some light air, shadows. That stuff is all stimulating in a different way than sitting here in front of the screens. Even if your head is in the clouds, your mind is still on your body. Get out there and run, release this stuff. The nervous system is all related to, getting out there and living a little bit. So I always point this out to new traders because they want to sit there and grind it out in front of screens. And I think you have to go through this a little bit. And I've been doing this for 20 years. And some of the best trades I've ever made have come from stepping away. And it could be as simple as get away from, those lunch hour blues, the 9 to 11 when nobody's trading. Then don't trade. Get away, walk away.
Right.
The third.
Yeah, it's.
Go ahead.
No, go ahead. I was just gonna say, the biggest mistake I see, not the biggest, but one of the biggest I see people make is, they stare at their screen all day. They should be working or doing something productive, but they're living and dying by every tick in the futures market, and you really can't do that. You're playing a mind game with yourself, and trust me, it's never going to end well.
Real quickly, the other rules are patience. Again, that kind of goes along with get away from the screens. You have to have patience in this game. Trading doesn't mean you're in a trade all the time. The next one is have dreams. It doesn't matter trading related or otherwise. And live those dreams and do what you need to do to make them happen in the right way. And also a fifth rule that I have, and trading could be applied here, is learn a foreign language. Trading is its own language, Carley, as you said. Learn it. It has its own way that it breathes, the mechanisms, and just own it. That's it. That's really, we've gone a half hour here, and I think we're going to keep it short and sweet. Carley, if you have any questions, we can call you at what number? Why don't we say it out here real quick?
Okay, phone number is 1-866-790-8723.
And folks, we really appreciate you taking the time.
Or feel free to send me an email.
Carley and I will be doing a few more of these webinars in the future, and we'll be, talking about. To me, trading is still, charts are great, and I'm a technical guy myself, but it all comes down to what's in between, that as my friend Jed Parks likes to say, that 6 inches between your ears. That is what trading is all about, and we hope to guide you and assisting in dealing with the mental anguish that can come and the upsides in this business. And if there's any questions, just send me an email. My email is misstrade@gmail.com, and I'm going to open up the audio if anybody wants to speak a couple quick questions. We'd be happy to listen to them. Actually, if you want to type them in here, there's a little question area down on the bottom of the chart. Looks like here in the go-to that you can actually type your questions. One person had asked earlier about FinViz, and FinViz is definitely comparable to Forex Factory. Briefing.com is another service that I would recommend. But these are some of the tools that we try to talk about. Again, a lot of the work that we do here at eMISTRADE is talking not only about ideas and trade suggestions, but we do try to really work on what happens between the psychological piece of this game. It is very, very much a game, and understanding and feeling that risk on every trade is, I think, one of the most important things that you can learn as a trader every day. So if there's, I'm not seeing any more questions there. If that's it, Carley, anything else you want to add? I think we'll wrap it up here, and we'll, again, look for another webinar for us in the next few weeks, and we appreciate everybody taking the time.
Carley Trading.
All right, Carley, we're all set? I'm going to